So today I'm going to do the stocks I'm buying February 2025 edition. So this is where I go through all the US stocks that I bought and sold between the 1st of January to the 1st of February. It's a video series that I've done on the YouTube channel for many years now. It's the most popular video that I do on the YouTube channel, and as well as that, it keeps with the transparency so you guys know every single move I have made in the portfolio. There's nothing hidden. A lot of other YouTubers like to just show you the things that they've bought, and then in a few months or years time when they've done really well, then they go, oh look at this stock, I'm up so much. And then if they buy something that doesn't work out, they'll try hide it from you in the background. Not here. Any moves that I made are on this video. This week, or this month should say, we've got 4 stocks that I bought, and also there's probably more stocks that I sold in this month. It was a really good month for taking profit, and I'll do those ones towards the back end of the video as well. Hope you enjoyed it. Let's get started. Now, just before we start, just a quick shout out. On the Patreon, I did drop a video, an exclusive video on the Patreon, which was the review of the US earnings. So we had the likes of SoFi, Meta, Tesla, Microsoft, and Visa on there. And as well as that, I did a complete review of Evolution AB's earnings, which is around about 20 minutes long, looking at their earnings as well. If you do want to join that, links in the description. You get 2 exclusive videos a week. You get to know what I'm buying and selling in real time on there, rather than having to wait for this monthly video every month for it. A Discord with 500 members on to talk about stocks, including me, and it's only £6 a month, or if you do want to pay annually, it does work out as £5.10 a month, which is not too bad at all. And as well as that, there is an offer for Webull in the comment section and in the description. If you do want to sign up through that, you can go get yourself 10 free fractional shares. They can be worth up to $3,000. There's only a couple of days left for that offer, and I don't normally do offers outside of Trading 212, but when Webull do an offer like this, it's worth taking it and going to get those free shares, so go give it a go. Number 1, we're going to start off with New Holdings. So this stock has had a fantastic month. The stock is up 24% in the last month, and I'm probably going to stop buying the position now. So you probably won't see this stock mentioned going forward unless the stock does fall a little bit cheaper, but I am glad I was starting to buy up that position in the last few weeks, and now I can sit back and see if the run continues from here. What they are is they are a payment company, a digital payment company, and they operate in Latin America, mostly from only a few countries, mainly Brazil, but we'll get on to that in a second. But payments in Brazil are exploding massively. The adoption of digital payments and getting access to financial products in Brazil has exploded really since the 2020 situation, and it's really started to speed things up. We are in Brazil, they're currently quite a few years behind the likes of Europe, the US, for example. And because they're just starting it, they're at the early stage. You imagine what the growth was like at the early stage. Imagine where we were at in digital payments about 10 years ago. That's where they're kind of at. And for the next 2025 to 2029, the CAGR is expected to grow in 28%. So major amounts of growth in this area as well. And New Holdings, being one of the big companies in this space, one of the first mover advantages, are taking a good capture of that. So if you look at the moment, customers are growing massively and have a great track record. And you can see really since 2020, that's when the explosion did happen. They launched Brazil in 2014. They have just started Mexico a few years ago. And as well as that, we have Colombia that happened as well about 3 years ago. So there's also room for expansion into other Latin America countries here. By the revenue by yearly cohort as well, the cohorts that they had even a few years ago are still growing at very good rates. On an FX neutral basis, you still have the even 2019 and earlier cohort still growing 51% on an FX neutral base. So people are still joining New Holdings, and then they're using more products within there, whether that be the financial products. Look at the revenue growth, very good revenue growth as you see here on an FX neutral basis. In the last quarter, 56%. 46% gross margins, and also net income as well is starting to increase as they do scale up, which is great. So you see the net income margin expanding as well with this business. The credit risk score has been pretty stable at the moment, which is also great to see. And the big thing really with this one that you have is the FX impacts. Like I said here, the numbers are very good, but obviously that's on an FX neutral basis. So there's always that kind of little bit of devaluation going on. And that's always the concern around buying into companies that operate in these sort of countries, is that potentially you've got to be prepared for a devaluation, and that could also sometimes hit the profit and revenue numbers. Even with that in place though, I think it's a pretty good valuation for the risk. You're picking this up at 24 forward times earnings. Before the rally, you could have picked this up at 19 forward times earnings, which I think was a very good value for it. Revenue growth wise, they're just expected to close off at 46% year over year. And if that currency stabilises as well, obviously there's potential for that to be even greater. The EPS as well has just doubled. For 2025, we are expecting 31% year over year growth. Obviously, it depends on some FX impact, but we've seen also the EPS go from 0.44 to 0.53. Now, when I was picking this stock up, like I said, it was around about 19 forward times earnings. Even with the risk of the devaluation in this sort of space, I think 19 forward times earnings for a company growing at 31% and the EPS as well, nearly going up by 50%, I think is very good risk to reward here. So yeah, I am a big fan of this one, and I have been buying that stock, but I've got to say it is on pause now unless the stock does come down. Next one, staying in the same sort of space, Latin America, Mercado Libre. So I do buy Mercado Libre when it does have these 10 to 20% dips, because it does happen quite often with it. And what we have seen is during the month of December into January, it was having one of those dips. Now, I've been in this stock for around about 2-3 years now, and some of my shares I'm up over 178% on. I keep buying this one though because I see the financials just execute to perfection, and when there is those kind of crazy dips, I do keep buying on the dips. So I am up around about 70% on my position, I believe, right now, because I do buy in those dips when the opportunities are kind of given. You'll be able to see, as I've bought into the stock, very often there is them kind of, there we go, a 17% dip there. You've got around about a 20% dip there. And over the last kind of couple of months to October to around about December, January time, you got about another 15% dip around there. So you're always getting those little opportunities to buy. And like I said, we kind of just went through one. So I was buying on that dip when that was happening with Mercado Libre. The issue that has caused this dip is that they decided we're going to do a little bit more investment into our credit portfolio, and it will sacrifice a little profitability in the short term, but it'll mean greater revenue growth in the long term. Now, the market is short-term thinking. The market always thinks 12 months out. For me, I'm a long-term investor. I'm not thinking where this stock is going to be in 12 months' time. I'm trying to think where this stock is going to be in the next kind of 3, 4, 5 years' time. And if this investment is going to generate more revenue growth, I'm happy with them to do it. So for me as a long-term investor, this is just giving me an opportunity for all these short-term investors to get out, and I'm going to make more money on it. Now, the company has done very well. 42% revenue growth, EPS, major improvement on the EPS. Next year, a little bit of a slower numbers of 23% revenue growth and still a good bump up in the EPS. I think they'll beat these numbers and exceed expectations just like how they did this year. Right now, you're picking the company up at 43 forward times earnings. This company normally trades at 60 to 70 times forward earnings, so if it does the numbers it's supposed to do, I think there'll be some metric expansion already next year and good upside. Difference between new holdings and Mercado Libre. Mercado Libre are like the Amazon of Latin America. So Amazon were very slow to expand into Latin America, didn't build their fulfillment network up quick enough. Mercado Libre jumped in, saw the success they were having in Amazon, in America, and said, we're going to do that before they get here. And they were able to take their crown of Amazon of Latin America. But they don't have Amazon Web Services. Amazon Web Services is a very profitable arm for Amazon. What they have instead is they have the PayPal of Latin America. They have this fintech platform, Mercado Pago, and this has been doing very well for them. It gives people a lot of access so they can go buy their products online, like on their Mercado Libre site, as well as a lot of finance options as well. So people are cross-selling or cross-using that Mercado Libre platform and Mercado Pago platform as well. And what we're seeing there is very good numbers growth. Total payment volume up 34% year over year, or 73% on an FX neutral basis, and merchandise volume up 14% year over year and 71% on an FX neutral basis. Once again, obviously the awareness of that this is hit by the FX situation sometimes. And if that was able to stabilize a little bit more, you imagine some of the growth numbers that these guys would be doing, it would be absolutely amazing. So even with that on though, I think the valuation is still attractive and the numbers are still great with Mercado Libre. Next one is AMD. So I have been buying into AMD. I've got to say I would like AMD maybe like 10-20% cheaper. So I'm quite happy with the position I've built up now, and if it can go a little bit cheaper, that would be absolutely amazing. AMD has performed very well since it did get taken over by Lisa Su in the 8th of October 2014. Since then, she's turned the company into a mega company that's performed absolutely amazing. Last few years, a little bit of a bumpy ride. I mean, last 5 years, it's still done quite well, up 146%, but there has been dips. We can see here the stock peaked in 2024. A lot of people thought they were going to be a major AI player, but their technology was a little bit behind the likes of Nvidia, so they got punished and the stock is now down around about 40%. But the technology, in my opinion, is starting to catch up, and I think that we are going to see AMD now come a serious supplier for products for the AI demand. So as we know, they do a lot of semiconductors. And what we have at the moment is the boom in the AI space. A lot of companies are spending on AI products, and that means it all can't come from Nvidia. Other players will have to come in, because otherwise Nvidia will be able to charge what they want and the supply chains will be an absolute nightmare. So people are looking for other products that will be cheaper or alternatives, and also quicker delivery times. And as long as they are good products that do very well, they should get orders. And that's what's happened with AMD now. They've started to get the products into place where they are starting to be a lot better. They do the data centers with the likes of the AI. You have the client as well. You have gaming, and you have embedded as well. Some of the new product launches are here, like the likes of the MI325X, which has gone into production in Q4 2024, which should start catching them up a little bit through the data centers at the moment. What we are starting to see now is the rebound in the data centers, growing at 122% year over year, which is obviously fantastic growth, and this is their biggest area in the business. Because this is also the biggest area and also the most profitable area, we're seeing gross margins expand as well. And as these products are coming available to market, we are starting to see the quarter over quarter numbers start expanding very well. Profit has expanded very well, as you can see here, and for the full year. And for 2025, we're going to see another expansion in the EPS. Revenue growth is speeding up as well. Last quarter was 18%. This one is expected to be 22%, and in Q1 we're expecting 27%. So the revenue growth is speeding up, where we are expecting nearly 25% revenue growth in 2025, which is very good and the fastest they've done for a long time. Right now, 23 forward times earnings, I think that's very good for a company that is about to do a big jump in their EPS and 25% revenue growth. Like I said, if I can get it towards like 18, 19 forward times earnings, that would be absolutely amazing. If it doesn't happen, I'm okay. Cracking balance sheet as well. Nice cash balance, no debt on there. Yeah, I like AMD. And the last stock, number 4, is Evolution AB. So you can buy this on the Swedish Stock Exchange, or you can buy the dual listing on the US Stock Exchange, which is EVVTY, which is the one that I buy on Trading 212, and that's where I buy my stock on this one. You can join that platform, the link in the description, and get a free fractional share worth up to £100. But been buying this one, love the dividend. They've just hiked the dividend up actually, so that's actually going to be more towards like a 3.9% dividend yield now, which is obviously really nice, getting that nice dividend. 13 times earnings, so below the market average valuation. Normal company trades around about 20 times earnings. This is way below it at the moment, and the share price hasn't really done anything for the last few years. It's down 42% since 2021, which I don't think is fair when you look at the financials, but all time has been a very good performer on the stock market. So they do live casino games, and they provide them to a lot of betting companies because they can't do live casino games. They've got enough to focus on, so they outsource it to the likes of Evolution, and they supply the games for them, and then they just take the cut. They did just come out with the recent earnings, which I thought were decent. Revenue growth was good at 12.3%. Also considering there was a few impacts like the Chinese cyber attack going on at the moment, that is not too bad at all. EBITDA a little bit slow at 7.9%. We do want to see that go a little bit higher going forward, but still very good growth. All the metrics are still moving in the right direction as well, and I'm sure they will, because what we're about to see is the US iGaming space kick on massively. So there's currently 5 states that allow iGaming, so there's plenty more states that will allow iGaming going forward. The other thing is that we had no state launches of iGaming in 2024, and they were still able to do these numbers. 2025, 6 states of iGaming are up for potentially coming online. If those states do come online, obviously they will be major growth drivers for the revenue growth in the US and Evolution, and they will do very well from it. And the iGaming in the US has the potential to be the biggest part of this platform, so there's major growth drivers for this going forward, as well as Latin America, which I've not even mentioned. You've got a cracking balance sheet. That's why they're able to do share buybacks. They've just announced another 500 million share buyback, and they're able to do dividends. The company throws off so much profitability as well, as you can see here, which gives them the options to do that. So you've got clear growth drivers with the US iGaming for many years. You've got a good balance sheet, you've got high profitable margins, you've got a dividend here. This is a good stock, and normally a good stock would be at least 20 times earnings, and you're picking this up for 13 times forward earnings, which just doesn't actually, actually 11 forward times earnings just doesn't make sense. So if they can hit the numbers that they're supposed to do going forward, that'll be very good for the company, and I think we will do very well holding this one. A little bit more confidence as boost as well. The actual managing director of the US part of the platform, after the earnings, actually went and bought some more shares as well, and also another insider, Louise, bought some shares, which is also what you want to see. So great confidence boost there as well. That takes me on to the stocks that I did sell. So I did sell a couple of stock. Well, I trimmed a couple. Well, I sold one position completely, and the rest were a couple of trims. So going on to the trimmed positions. So first of all, Lululemon. I made a video about this one. I did sell my position in Lululemon. Just ran up too much. Not much upside left in my opinion, and also the kind of ledgers clothing space makes me nervous. Trends move so quickly. There's no loyalty. I'm going to take my profit and run. So I bought here, made a good amount of money, made around about 60% on my position there, and decided to take the profit. I was banging on about this one, saying, some other YouTubers were saying buy Nike. I was like, nope, don't buy Nike. That's still overvalued. Buy Lululemon. That's actually 19 forward times earnings and still doing good numbers compared to Nike. And hopefully some of you guys listened and made some good money on that position in Lululemon. Next one, so trims. I did trim my PayPal position. I trimmed it 3 times actually. So I trimmed my PayPal position 3 times. All 3% trims, so altogether 9% I took off my PayPal position. One was for a 22% profit, the next one was for a 25% profit, and the next one was a 30% profit. So yeah, locking in some profit on PayPal once again. Like I said, it went to my 3rd largest position. I think the value is very fair now, 21 times earnings, and the numbers have been a little bit disappointing in my opinion. I think 5% revenue growth is okay. It's about fair for a 21 times earnings, and without metric expansion and only 5% revenue growth, in my opinion, there's not much upside left there. They do report earnings this week. After I listen to their earnings report, I'll then decide if I'm going to release any more capital on my PayPal position. So I'll have a better idea when I have the updated numbers. Next one, DraftKings. Obviously, what a performance this has been for us. I did decide to lock a little bit of profit in the DraftKings position. It has been on a little bit of a rally. Maybe went a little bit too early because the rally has continued. Not that there's anything wrong with DraftKings. I do think they could have done a better job last year. I think they made a few mistakes last year. So, yeah, but it wasn't terrible. Like, the long-term game plan is still there. I just think that they maybe could have done slightly better than what they have been doing. But the main thing was just locking in profit and moving into, getting more exposure in the space through other stocks like Gaming Realms, Evolution, Gambling.com. I just had to manage my risk exposure into this space, and I decided to just take a little bit of profit off the table. I trimmed about 3% of my position, and I locked in around about a 35% profit on that one. So maybe I should have waited a couple of days and I could have took a little bit more off the table, but I'm happy with that little trim there. And the last one was actually on Friday, so 2 days ago. I just looked at Hims and Hers. It was going on one of its crazy runs again, and sometimes when it goes on these crazy runs, it can pull back. only takes a little bit of GLP-1 news to come out and then it can throw it down another 20-30%. So I thought, you know what, I'm just going to lock a little bit of profit in here. Hims and Hers as well is like towards a more of a fair valuation now as well, in my opinion. So it's not, I thought, you know what, if there's not undervalued here, I probably should take a little bit of profit off the table. So yeah, I did decide to just take a little bit of profit off the table. Trimmed around about 2.5% on my position, and I trimmed that for a 470% return, which is crazy to say. I wish it was 500, but let's 407% is still very good, especially when you think about all the people that was against this one and said it was uninvestable. And yeah, been another, it's been a while since we've had a big one like that, 470% return, and saying that one, it's that's a mega amount of money. So just a little bit profit taking because of the run it's been on. And I can't even remember the last time we had a stock that we were talking about like 300-400% returns on. Obviously there was Tesla that was like 400% the first time round. Pinterest was like 300-400%. In mode, during the days when we were taking 300-400% return on in mode, I remember people criticising me for that one as well. And I bet they're thinking now, actually that was a good decision. Pinterest, JD.com, I think we sold that one at some point, wasn't it? We took some profit out of that one for like a 400% return. So it's been a little while since it's been like one that's been like that big, really, isn't it? I mean, we did take some on Hims and Hers at 300%, I think, last time, but no, that obviously was the same stock. So yeah, fantastic overall, and a great month for some locking in profit as well, which is great. So yeah, thanks for watching, guys, and I'll see you on Monday or tomorrow for a bit of a market preview, I think. So yeah, see you then.